Can you talk to me about how concretely you can grow the bank regardless of market conditions?
I would never say regardless of market conditions, but we have been growing in those 3 years. If you look at revenue, it's up about 15% in wealth management. We have a very simple approach to this. We don't look at the total revenue, because when you look at the total revenue, you're adding 1 Swiss franc of volatile, capital consumptive, low margin business in sales and trading to 1 Swiss franc of high quality, stable, recurring, capital efficient revenue. And adding the two doesn't tell you the story. The story is that on the first we have accepted attrition. We have lost about 4 billion of revenue, but it's a business that has a 7% margin, and we've replaced it by 2 billion of additional revenue in wealth management, but has a 30% margin. So the maths of that are very positive, and that's why the profits from our core this year are 20% higher than in 15 with 40% less capital. So moving capital from a capital consumptive, low margin business to a capital light, high margin business has worked. So we focus on the clients. We went for ultra high net worth, as we discussed many times, because we can have a broader relationship with them. We can manage their assets, but we can also advise them on their business. We said the bank for entrepreneurs. The interesting thing about that is that it makes your assets more sticky, because you have a proper relationship. And we've seen this in Q4. Our assets under management, we lost 35 billion to market effects, but we have 34 billion of NNA. Okay, so the assets are flat. They went from 772 billion to 771. We only lost 13 billion.
And this is what, loyalty?
Yes, we only lost 13 billion to FX. When you convert that in Swiss francs, Swiss francs keep strengthening, so our AUM is down 2%, but exclusively because of FX.
Are you frustrated with your trading units?
I'm not frustrated. Look, they've done, honestly, a very good job. We've eliminated more than 3,000 jobs in that unit. We gave them a harsh capital target. We said we would right-size global market. We took its size down very significantly. We took the cost down very significantly. If you look at the targets, we exceeded the cost target by more than, we exceeded the capital target in terms of reduction. In revenue, we did 5.1 billion, and we were aiming for 6. That's 85% of the target, so it's a 15% miss. Given everything that's happened in markets in the last 3 years, they can't really be blamed for that. A lot of that is cyclical.
How have they been performing in the last 2 months?
Look, there's a bit. Okay, so I mean, a number of my peers are saying this. I'm afraid it's true. Q1 19 is much better than Q4 18, but that's not saying much. But it's significantly lower than Q1 18. So that's where we are. Bounce back, but significantly lower. Where things are positive is on the wealth management side, where the AUM is now back where we were in November. So basically, or slightly above. All the dip that we had in December has been basically erased.
So where do you see the best opportunities in wealth management this year?
Look, the beauty of our model is we have a broad range of products and services. So as the economic cycle unfolds, we do different things for our clients. I can tell you, for instance, Asia had its worst fourth quarter in the stock market since Q4 08. So it was a huge dislocation. Street fees are down more than 30%. But our financing group had its best quarter since its creation, second best since its creation, and best fourth quarter ever. Because these are moments where the clients want us to use our balance sheet to support them. You will see that the CET1 went down. Well, it's not because of market, unlike some other banks, because we have the risks. So the market RWA and VAR has not had an impact. What we have done, it put capital to work to support our clients. And I say, if you don't desert your clients when things are tough, they won't desert you either. So it's very important in our business, which is built on trust, to support the clients in an economic downturn, and that's what we're doing.